What's going on, team? Welcome back to another video. Welcome back to the channel. Welcome back to another weekly stock talk. My name is Xander with Vlrs Trading Academy. This week, what we'll be doing is we'll be taking a look at the SPY, which is the S&P 500. We'll also be taking a look at the NASDAQ, and we'll be looking at a few opportunities that are being presented throughout this week. So if that's anything that you're interested in, make sure to like this video, make sure to subscribe and share this with a friend, and let's jump right into it. So the first thing we're going to take a look at is going to be the S&P 500, which is SPY. We've obviously been seeing a lot of stagnation here in the last week. We have reached all-time highs. As expected, we've talked about this in the previous videos that we were going to be pushing up to higher highs here that we have achieved. And so this stagnation here that we're seeing, it's nothing surprising. There's a little bit of uncertainty going on in the market, in the overall market right now. So from a technical standpoint, seeing this consolidation, seeing this stagnation is nothing surprising. We did pull back a little bit here on Monday to the 50 simple moving average. And we might see a little bit more pullback happening. However, it looks like we are starting to turn around here on the MACD. So, I wouldn't be surprised to see either, a leveling off that we have been seeing here or another push to higher highs. So that's essentially what's going on from a technical standpoint here with the S&P 500, with the SPY. The NASDAQ, very, very similar. If you're going to take a look at the chart, you're going to see that it's going to really represent almost the same thing that we just saw here with the SPY. So let's go ahead and zoom into this. So once again, last week, lots of stagnation happening pretty much Monday. We saw a little push here on Monday, and then we pretty much stayed leveled for the rest of the week and into this new week happening here today. We did see a little bit of a push down on Monday. On the S&P 500, we saw the same thing happen. It was a little bit more a little bit of a greater margin that we did see that pullback happen versus the NASDAQ. However, overall, they're really, really acting very, very similarly. So, if you're going to take a look at both of them, nothing really surprising that we're seeing this happen, and they're really correlating with each other. I do expect both of them to turn around throughout this week and into next week. I am expecting that pullback to eventually happen that we have been seeing every 15 to 20 days. So do expect that. Make sure that you're counting those days and preparing. It tends to happen, as a pattern. They do repeat themselves. Patterns do repeat themselves, but they don't have to necessarily. But we are at those all-time highs. We are seeing a little bit of stagnation. I'm not saying that we're going to see a pullback just yet. However, there is some room for a little bit of a push to the upside. However, be prepared, right? And that brings me to talking about the stocks that we'll be talking throughout this week, right? Or throughout this stock talk that we're going to be talking about today. So a lot of these stocks, because we saw this pullback happen here on Tuesday, we were closed on Monday. So we saw on Tuesday a little bit of a pullback happen. So after a 3-day weekend, you never really know what to expect in all truth, right? No matter what somebody's telling you. However, obviously from seeing what we saw, obviously, you're going to see those pullbacks happen in those stocks as well. So if you were invested in anything that you were invested in over that 3-day weekend and opened up on Tuesday here, and you saw a little bit of pullback, don't be panicking, because the whole overall market has been pulling back. So nothing to be afraid of if we do start seeing a more substantial pullback. Obviously, make sure that you're managing your risk and you have your stop losses. However, if we do see a bigger pullback happening, that's when you should really start concerning yourself with, should I stay in this trade or not? But as of right now, it's technically a Monday. It's Tuesday, but technically a Monday that we opened up after a 3-day weekend. So we saw a little bit of uncertainty, a little bit of a hesitation happening, obviously a little bit of selling happening because we did see the overall market pull back. But I would really let this pan out throughout the week to really make a decision as to what you're going to be doing. The stocks that we will be talking about today, once again, I did say that we did see pullback in all of these stocks, or some of these stocks, right? So they are presenting those great opportunities, those pullback opportunities for you to jump into when we do start pushing to higher highs on the overall market. So let's go ahead and jump into the first stock that we're going to be talking about. And that's going to be BAC. This one has been on and off our watch lists over the last few weeks. So this is one that I really, really like because of the consistency behind the actual stock. So let's go ahead and zoom out. We can see that ever since basically January, we can zoom out even more, but ever since and you'll see the same exact pattern, but even since before January, we've just been seeing consistent uptrend patterns. Obviously, it pulls back down to the simple moving average, the 100-day or 180-day and the 200-day moving averages. But for the most part, we do push up consistently. So we did end up pushing to 43. We did pull back to the support level. And we stayed at the support level for some time, and now we're starting to push a little bit higher with the overall market pulling back. We did see a little bit of pullback happening here in BAC. However, with the consistency, I do expect us to continue pushing higher, right? We saw highs of 43.5. And so I do expect to see that in the near future or in the coming weeks, right? For sure. Just because, this has a proven track record of how consistent this stock can be. And while the margin isn't super huge, at least when you invest in something like this, and understand that, the pattern behind it, the consistency of the company, you understand that, your risk is much smaller and your money is much safer when you are investing in stocks, something like this versus something a little bit more speculative, right? So the margin to those all-time highs that we saw at 43.50, we're looking at about 4.37%. And then obviously we're managing our risk at probably about 2% here on this one if you do choose to jump into it right now. From a technical standpoint, it does look like we are starting to push up to the upside, looking at, the MACD and looking at the RSI, we do have some room for a push up to the upside. At the very least, I do expect us to push up at least another 2.6% up to that 42.77 level. And those were the highs that we got rejected at the last two times. So, I do expect us to push at least to that level, if not higher. So pay attention to this one, add this one to your watch list. This one follows very closely with the S&P 500 and the NASDAQ. So when the overall market pulls back, so will this one. And that's what we've been seeing. So now that we're starting to see a little bit more bullish momentum happening within the market, I do expect this to continue pushing higher as well. So along the lines with that, we're going to take a look at USB. This is also a bank stock. So USB. Very, very similar. This one has had a lot more pullback happening. We had highs of 62.47. We pulled back all the way down to this 55.83 mark that we're at right now. So from current price points to those all-time highs, we're looking at about 10.22%. And because we are at those lower levels, we do have that support line sitting right down here. And we're fairly close to that support line. We're not quite there, but we are fairly close. Once again, very, very similar pattern, consistent uptrend pattern. Follows the overall market, pulls back with the overall market pulling back. So this one has a little bit more margin. And so if you are going to go ahead and measure the risk to reward, we're looking at about, that 9.71, approximately 10%, and we have that risk of about, I would say 3.4% all the way to that support level. So that 3.5% for that 9%, I would say that, or 11%, I would say that risk to reward ratio is fairly good. So definitely one to consider. Add this one to your watch list. And the last bank stock that we're going to be looking at, these all follow a very similar trend. And so this last one is going to be Bank of New York, which is BK. Had highs of 56.89, pulled back down to the support level that we did find support at before. So let's see if this does hold. So from current price points to those all-time highs, we're looking at about 7%. And obviously the risk, I'd be managing it probably under that 180-day and 200-day simple moving average, which is about 3.5% of risk for that 7%. So I would say it's about a 2-to-1 ratio, which, it's not a bad ratio. It's not super huge. However, it's very consistent, very reliable. Obviously, stocks that are consistent and reliable, it's a lot easier to make money in those stocks. So consider these three for when the market continues to push higher. The next one we're going to be taking a look at is going to be Visa. So this one here, also a very, very consistent stock. We're looking at a 4-hour chart right now. Let's go to a daily. That way you guys can see how consistent this has been. We have seen, a little bit of a push up, and then we pulled back to the simple moving average, a little bit lower on this side, and then pushed up, pulled back to the simple moving average, pushed up, pulled back to the simple moving average, pushed up, didn't quite come down to the simple moving average, but then we pushed back again, and now we came right back down to the simple moving average. Looking at the MACD, once again, we're looking at the daily. So looking at the MACD, it looks like we are starting to curve and turn to the upside. RSI, fairly overbought or fairly oversold. So by the time we become overbought, I would expect this to return at least to those 252 levels, right? So we're at 226 right now. So let's go ahead and jump back into that 4-hour chart. That way it's a little bit, you see a little bit more data. So the reason why we're looking at a potential reversal at this point, not only because of the daily chart starting to curve on the MACD, but here on the 4-hour chart, it looks like we did come down to the support level that we've seen before. And it looks like we did bounce and we're pushing higher to these higher levels. From current price points to that 252 level that we're looking at about 10%. And obviously we'd be managing our risk right below the support level. So we'd be managing at 3%. So it's approximately a 3-to-1 risk reward ratio on this one. Visa, very consistent company, very consistent trend that we've been seeing within the technical side of things. And so once again, Visa is not going to be going anywhere. And so if you ever wanted to jump into a company like Visa, this would probably be a great pullback opportunity for you to consider, right? Even if we don't return to those 252 levels, but we come back up to at least to retest that 180-day or 200-day moving averages, we'd be looking at about 5% profit potential for about a 3% risk, right? So obviously, the reward exceeds the risk. As far as the risk goes, everyone manages their risk at whatever level they're comfortable with. So make sure to consider that, consider the level of comfort you have with risk and establish that risk to reward ratio for yourself. Obviously, depending on how long-term you're investing, whether you want to wait for it to return to that 252 level, or if you want to jump out at that simple moving average level, that's up to you. However, the opportunity is definitely there. Make sure to consider this and add this to your watch list. We haven't seen these price levels since basically May. So it's been quite some time since we've seen this Visa stock be at such a cheap price, right? So that's what's going on with Visa. We aren't super overbought and we're not super oversold here on the RSI. MACD looks like we're starting to push to the upside. So like I said, it's not a guarantee that we will see that reversal. I'd be watching this level right here, this 230.28 level. The reason being because we keep getting rejected by this 50-day moving average. So that would be the level I'd be watching. If we break above this level, definitely going to see a push to the upside. So that's what I'm watching with Visa. The next one that we're going to be taking a look at is going to be Facebook. Very consistent stock, Facebook. We did see a huge pullback or a push up to the upside here on Tuesday. Even though the overall market pulled back a little bit, we did see a push on Facebook. And this one we did announce to the team yesterday before the week even started. So if you're not part of the team, make sure to let me know in the comments or hit me up on Instagram. That's going to be linked down below if you want to join the team. But we did send this out right before the week began. So if anybody did jump into Facebook this morning, they would have been up quite a bit. They'd be up about 2.2%. And it looks like we are just getting started here with Facebook on the reversal to the upside, just based off of the MACD. Have quite a bit of room here before we hit those overbought levels. However, Facebook, once again, very stable, consistent company. They're not going anywhere. They've been trending to the upside over time, over the last pretty much year. I would say they've just consistently been bouncing here at that simple moving average. We didn't quite come down to that simple moving average. We came down to that 50-day moving average. However, we did end up seeing that bounce. We'd probably come down to that 180-day, 200-day once the overall market starts pulling back, similar to what we saw just a couple of weeks ago. So that would be an ideal time. But if you're trying to make some money over the next week, that would, obviously taking advantage of Facebook this week would be something to consider. So that's what's going on. MACD starting to curve reverse. We've got a signal here coming up to the upside. Before we become overbought, we've got some time. So definitely one to consider and add to your watch list. The next one that we're going to be looking at is Roku, ROKU. This one here, we have been seeing a very horizontal pattern with Roku. We've been basically trading in this channel, and the reason that I'm very interested in Roku is because we're taking a look at, we're obviously looking at the overall pattern that we've been trading in, which is a horizontal pattern, but not only is the MACD starting to curve to the upside here on the 4-hour, we are fairly oversold here on the 4-hour as well. And we are sitting here close to that support level at the very bottom. So that is those three things you would probably want to consider when you're looking into, Roku from a fund or from a technical standpoint. Obviously, don't forget to look into Roku from a fundamental standpoint. However, we're just analyzing these stocks from a technical standpoint. From a technical standpoint, this is something that I would be interested in simply because of those three things, right? And it looks like we have been pushing up over the last couple of days. We did push back last week at the end of last week, but now this week we're starting out with a little bit of a more positive note, right? And so we are starting to push to the upside. We do have that critical volume level here that we're approaching. We're starting to approach here at 357 about. So I wouldn't be surprised to see us return at least to that 50-day and that 100-day moving averages, right? If not up to that 180-day and 200-day moving averages. So we're looking about 14.22%, just to the 180-day and 200-day moving averages. But if we return up to that resistance previously that we've set up at 490.76, we're looking about a 40% return. So definitely want to consider a 40% return. And if we manage our risk at this support level, we're looking at about a 6 to 7% risk. So, obviously you can give it some time if you really want to wait for it to come down to the support. I'm not sure if it will. However, if you are a little bit, if you don't want to take on 7%, you can always cut your risk a little bit smaller. So you can manage it at 3, but 7% for a 40% return, definitely something to consider for sure. And the opportunity is absolutely there. So that's what's going on with Roku. The next one's going to be CHWY. So this is Chewy. We saw a little bit of a pullback. A lot of the stocks that we've talked about over the last 2 to 3 weeks were stocks that saw pullbacks due to earning. And obviously we did end up seeing a lot of them recover. So this is something that happens quite a bit. We do see pullback after earnings, and then we see a push up after, a few days. After a few days of, the market being open, after those earnings came out, after the stock price dropped, we do see that stock recovering. So this is one of those situations. We saw this drop significantly after the earnings. And it looks like a few things that we're looking at here is we're looking at the RSI, very, very oversold. That's to be expected because of the sharp drop that we saw. However, oversold means that it's undervalued as of right now. So this is something that, I'm very interested in because of that. MACD also, we're looking that we are starting to curve to the upside. So with this one, what I'd be watching is this blue line, which is your EMA. Once we do break this blue line, that would be your entry point. And so from this entry point to, let's say, pre-earnings levels, we're looking about 11 to 12%, right? And that's not even those all-time highs, that's 11 to 12%. So if you're willing to, let's say, risk, I would say, 3%, you're looking at quite a bit of a return, and your risk to reward ratio is very intact. So make sure to consider this one, Roku. This one, very, very attractive opportunity. If it is a little bit more on the riskier side compared to some of those stocks that we've talked about so far. However, the return is fairly substantial, considering that if we do return to that $120 all-time high level, we're looking at about 36.5%, right? So risking about, I would say, 3 to 4% for a potential 30+%. That's quite substantial, right? So that's what's going on here with Chewy. The next one is going to be Zoom, ZM. Once again, another one we saw after earnings dropped. This one has been recovering ever since earnings. So we had earnings last week, and this one has been recovering slowly ever since then. If we measure just to those pre-earnings levels, we're looking at, again, 12.37%. And if we look to that 180-day, 200-day moving average levels, we're looking about 15-16%. That's not even to those all-time highs. We are having, obviously a little bit of uncertainty with, are people returning back to work? Are people returning back to school? Are we going to continue using Zoom as a very crucial element of society that we have been using, over the last few months to a year throughout this pandemic? So, the question's still there, and Zoom has been doing a lot to improve themselves as a company. So I wouldn't be surprised to see this I wouldn't say it's going to shoot up real quick. Excuse me. However, I do expect this to return to at least those pre-earning levels. So that's what I'm looking here with earnings. If we return to those highs, not even all-time highs, those highs before earnings, we're looking at about 26%. So let's say we do set up a support level down here at where we ended up bouncing. I would say We obviously have a level right here at 2,270. And then I would say we have another level where we did see a little bit of resistance is right up here, which is exactly where we bounced. So let's say we do a risk to reward ratio here down to this level. We're going to be risking about 4% for a 15% profit potential. So that is what, a good risk to reward ratio looks like. Zoom, also a strong company. They're definitely not going to go anywhere. They're a little bit more unstable than some of the ones that we've looked at before. However, the risk to reward ratio, the opportunity, the setup, the technical setup is all there. Definitely one to pay attention to and add to your watch list. The next one's going to be Walmart, WMT. So Walmart, we saw a little bit of pullback. We saw highs of 152 right during earnings. We pushed real high, and then we ended up pulling back right to this 100-day moving average. It looks like we have been pushing back a little bit lower. With this one, I wouldn't say this is quite something to jump into just yet, just because looking at the MACD, it looks like we're starting to pull back a little bit more. But what I would say is pay attention to about 145 to 144 levels. So we do see a lot of bouncing happening here on the simple moving average, right? The 180-day. Once we break above it, we tend to have it as support. So it looks like we are potentially pulling back to the support, which is what I would probably wait for. Because with earnings, we saw a huge influx in volume, huge push up in price. And so now we're kind of leveling out. So we're pushing back down, leveling out, potentially going to come down to this 180-day level. But until then, we did see a huge drop here. So make sure to, with the overall market, we saw that drop. So even if you do try to recover this move right here, you're going to be recovering about a 2% move if the rest of the week starts pushing higher. But from the current price points that we're at to that one all-time high level, we're looking at about 3.35%. Not the greatest margin. However, Walmart has been doing very, very well as of lately. So, you don't really necessarily want to miss out, but you do want to get in on at the better deal. So I would say stay patient with this one. I wouldn't say that this is the greatest time to jump into this, but this is definitely a great opportunity to pay attention to because this one has been pushing up fairly well throughout all of last year and all of this year, even though we've seen those pullbacks happen occasionally on those earning reports. So that's what's going on with Walmart. The next one that we're going to be taking a look at is PayPal, PYPL. So PayPal, yet another one that we talked about with the team on Monday when the market was closed. Tuesday, we saw a nice push to the upside. So once again, great opportunity for some to take advantage of that 2.2% just in one day on this one. And then what we're looking at with this one is we are starting to see a bit of a recovery happen. We pushed back down to this level right here at 265 after we made highs of 312. And it looks like we stabilized. We came down once, we came down twice, and it looks like we're starting to push higher and higher. We broke that 50-day moving average first, then the 100-day, and now we broke that 180-day and 200-day, and we're pushing higher. So from current price points, I would expect to return at least to that 312 level. So that's about 6.24%. I would manage my risk right at that 180-day level, which is 4%. We aren't super overbought, so we do have room to run. And the MACD looks like we're starting to curve to the upside going into the green. So definitely, I would say this has plenty of room to, push to higher highs, if not just to those all-time highs. That first level of resistance that we're going to be watching is that 312 level. Probably around 310, 309, just because we got rejected here before. So 309 to 312 return. Once again, we're looking at about, I would say 6%, 5.5, 6%, and then risking about 3%. So 2 to 1 risk to reward ratio on PayPal. That's what's going on with PayPal. The next one's going to be Square. Very similar. Some people have a preference on which one they would rather invest in longer term swing wise. With us, we're just taking advantage on the short term. As far as the long term, that's really up to you to make that decision, which one you prefer, Square or PayPal. However, the reason we're looking at Square here is we pulled back to this simple moving average of 180-day and 200. We've stabilized. We've used this as a support before here back last month on the 19th. Then we came down again during earnings to the simple moving average again. And then we came down on at the end of the month as well, we came down to the simple moving average, and now we're back at the simple moving average. So this has been consistently holding as a support. So from current price points, considering that this is a support, we're looking for a return of about 7%, and obviously managing our risk right under that. So I would say a 3% risk to a 7% profit potential. That's about a 2-to-1 risk to reward ratio. So that's what's going on with Square. The next one that we're going to take a look at is going to be Pinterest. This one has been taking some time for it to recover and push to those higher levels. However, Pinterest, I believe, is definitely going to perform well over the next longer term, right? And so we've been holding this support level for, I would say, about a month now. So this is a very, very strong, consistent support. Obviously, looking at the volume profile level, I don't expect us to be going any lower than where we're at right now. So if you ever wanted to get a deal on Pinterest, I would say this is the time. We did see that push down here for after earnings, and then we pretty much dropped down slowly to that support level, dropped a little bit below it, but then now we've stabilized right above that support level of 54.49. So from current price points to the simple moving average, we're looking about 12%. To recover all the way to those levels that we were pre-earnings, we're looking about 25%. And if we return to all-time highs, we're looking at about 60%. So with a risk of about 3 to 4%, a potential of 60% reward, definitely something to consider, in my opinion. This one is a huge one that I personally am interested in, that I am invested in as well for the longer term, for a swing position. So that is not financial advice. That is just something that I'm doing. So if you guys are interested and you guys see the same value that I do in this particular stock and this particular company, this is the opportunity. This is the breakdown. It looks like we are breaking above not only the 50, which we broke above already, but we're also breaking above that 100-day moving average. And we're slowly, even if we're not really going anywhere, I'm not too worried about it as long as we're not dropping below that support level. But the potential is absolutely there. So make sure to consider Pinterest as a potential play. If not on the short term, definitely on the longer term, a few weeks, a few months, definitely one to consider with the 60% return. That's one that I would encourage everyone to really look into. UAA, that's going to be the next one that we're going to be looking at. This one also has been trading fairly horizontally over the last, I would say, few months. We traded in this channel for a little bit. We pushed a little bit higher to that 26.45 level, came back down to this channel, and then dropped down to a lower channel, traded in this channel for a little bit, and then we broke right back up to 26.45, and then we came back down. I wouldn't say we're retesting this middle channel right here, but we did come down to the simple moving average. Not only while we were coming down to through these channels that we get rejected by the simple moving average of the 200 and 180 day, but we also, obviously went through the motions of going through these levels. So now that this was a resistance, I would expect this to now become a support because previous resistances become new supports. So now I am expecting that 180 day to act as a support. Looking at the RSI, it looks like we are starting to look very oversold, which is a potential indication of a reversal. So this is another reason I'm interested in it. And on top of that, it looks like we are potentially starting to reverse here on the MACD. So I'd be really watching this level right here. Very, very minimal risk on this one because we're going to be using the 180 day as that risk. So I would say about a risk of 2 to 3% for that potential of about 14 to 15% to that resistance level of 26. Where was it? 26.45. So for that potential, we're looking, I would say that risk to reward ratio is definitely there again. So UAA, Under Armour, that is the plan with Under Armour. The next one that we're going to be looking at is UPRO. This one follows the overall market quite well. So today we saw a pullback on Tuesday. UPRO pulled back on Tuesday. UPRO, it pulled back on Tuesday as well. So as long as the market's pulling back, this will pull back. If the market starts pushing up, this will start pushing up. So if you're paying attention to the SPY and the NASDAQ, once you start seeing that starting to push up to the upside, that's when you're going to want to jump into this one because this is going to start pushing up. We saw that pullback in the market, and then we saw that recovery. We saw that pullback in the market, saw that recovery. And now we're starting to see a little bit of pullback. And once this starts recovering, or once the overall market starts recovering, so will this one. So we're not quite oversold yet on this one. MACD isn't indicating any potential reversals. So might see a little bit of a red day here on Wednesday, potentially. But if we don't, and it does start to recover, UPRO is probably the move to do if you're trying to make a quick, I would say, how much reward do we have here? A quick 2%. So quick 2%, nobody's going to complain about 2% on something very, very stable. URBN, that's going to be the next one we're looking at. Ever since earnings, this one has been pulling back. This one, I'm not saying that it's anything substantial to jump into just yet, but I'm very interested in paying attention to this one because it has pulled back so much. So we've had a support right here that it ended up breaking. The next support level that we're going to be watching is going to be this one right here. So I would say this potentially has room to drop to $30 before I would even start considering it. I am looking at this one right now. The reason I'm mentioning it is because we are starting to look very oversold. So when we do look oversold, it starts becoming a very attractive opportunity. MACD starting to look like it's potentially going to start curving to the upside. We attempted to break up above this resistance level just right here, but we ended up getting rejected by the EMA and we got rejected by this resistance level, and boom, now we're starting to push down lower. So that next resistance level is going to be that $30 mark. So pay attention to this. The opportunity here for a potential recovery, let's go ahead and measure that out. If we do buy at 30, for instance, and it does recover to, let's say, pre-earnings levels, we're looking about 23% from current price points. If you do jump into it now, you're going to be risking about 6% for about 20%. So you're risking a little bit more if you're jumping in right now, but it is dropping. And so I never encourage anybody to jump into something that's selling off. You never want to jump into a falling knife, right? You want to be jumping into something that's starting to make higher highs and starting to push up to the upside. If you're just throwing money at something that's dropping, it's not going to change anything, right? Because the market doesn't care how you feel about it. It's going to do what it's going to do. And if you're going to come down with the market and come down with the stock, you're just going to end up losing a lot of money. So stay patient before jumping into this. Wait for it to break above this blue line, the EMA, right? Wait for it to reverse to the upside, break to the upside. That's when you can start taking that risk and setting up that risk to reward ratio, setting up that risk, setting up that stop loss, and then taking advantage of this opportunity. Until then, until we start seeing a break to the upside above this blue line, just keep your eye on it, add it to your watch list. But I would say stay patient with this specific one. But the opportunity is definitely there, and pay attention to that. Make sure you can take advantage of it when it begins to reverse to the upside. The next one that we're going to be taking a look at is GPRO. This one, we ended up seeing a lot of push to the upside here in March, and then a little bit more at the end of May, May, and then beginning of June. And then we ended up pulling back to this level about $10, $9.82, $10. And we've been pretty much just hovering in this channel right here between this resistance level and this support level. And the reason this one's very interesting to me, in my opinion, is because we are at this support level. And this is a very, very strong support level. We've been holding this support level for the last, I would say, a month and a half, 2 months. So this is a very, very significant level. And that also is obviously defined here in our volume profile. However, the risk to reward ratio here. So even if we do push to the upside here to that resistance level, the channel that we've been trading in, we're looking about 10%. The risk, obviously, we're going to be managing our risk right underneath this resistance level. So let's go ahead and zoom in. That way it's a little clearer as to what I'm talking about. So let's go ahead and shift this over, right? So we have this resistance level right here, and we have this support level right here. And so we've been trading and pretty much holding this support level for a very, very long time here. And so I would say we are at this support level right now. So this is one to consider if you're trying to capitalize on this 10.7, 11% move, because we are probably recovering up to this 1077 level when we do begin that recovery. This hasn't really been going anywhere. I would say you can really go either way with it. You can manage your risk just under it at about 2% for that 10% potential. And I would say 2 to 3% should be sufficient to manage your risk for a 10% potential return, if not higher, right? So it really just depends what happens. But I would say they have been going through a lawsuit as of late. So I would say, the potential for it to recover to even that 1250 mark, right? It's very, very attainable, right? And that's about a 26% return. So I'm just being conservative with that first level of resistance. But either way that you twist this, or either way you look at it, the risk to reward is definitely there. The opportunity is definitely there. And if you ever wanted to jump into something like GoPro, this is probably a great time for you to consider doing that, or consider this stock as a potential opportunity. The next one is going to be COMM, COMM. This one here, very similar to Pinterest. We had a huge pullback here on earnings, pushed back a little bit more. We broke above the EMA, and then we ended up breaking about the 50 moving average. And now we came back down, and it looks like we are retesting that 50-day moving average. So we might push down a little bit lower, but I would say either way that you look at it, this is definitely a great opportunity. And either way that you look at it, the risk to reward ratio is absolutely there, depending on how much you want to risk, right? So obviously, if this does drop down to that level of 1439, I would say that, you have that risk of about 7%, 6.57%. However, your return to pre-earning levels is about 26.5%. If we did talk about this initially after it dropped, when it was very oversold at these levels. So the team has had the opportunity to jump into this quite a bit earlier when we were at these lower levels. However, either way, right now that you look at it, the opportunity is definitely there. Currently, we're at price points that we were at back in March of this year, the beginning of this year. So these levels are very, very low. I would say that, that's just the pre-earnings levels. If we're looking at those all-time high levels, we're looking at about 43%, 43.37%, which is huge. So that's the reason I'm looking at COMM. That's why that one's attractive. It looks like we are starting to pull back a little bit. So I would watch that 50-day moving average to see if it breaks below it. If it does break below it, then obviously we're going to drop back down to that support level that we were at, which is about 1444. And the level I'd be watching right now is 1532. So that's what's going on here with COMM. The next one that we're going to be taking a look at is going to be Google. Google is a very, very strong, stable company, GOOG. This one, I mean, you can just see from the, from the chart, just looking at it from a quick glance, that this one has consistently been just pushing up to the upside. It looks like we are starting to reverse here on the MACD to the upside. We aren't overbought, so this one also has room to run. I expect this to make higher highs. Very attractive, strong, stable company. If you don't want to take too much risk, and if you want to just, ride it out slowly, I would say that this has about another, let's see, from current price points, another 2.33%, similar to UPRO. Before it potentially starts curving back down a little bit and a little flattening out a little bit. But overall, I mean, you can see from a big picture that this trend is just consistent. This is probably one of the most consistent trends you'll see, which is Google, right? The Alphabet company, Alphabet Inc. So that's what's going on with Google. Not too much to say about that one. Fairly easy to understand, fairly consistent. Big, that's going to be the next one. This is one that has been pulling back for some time. We hit those highs of 73.23. And it looks like we are pulling back down to the support level. I would say stay patient until this 41.71 level, because that has been a support back in January. And it looks like we're starting to push down here. No signs of a reversal of any kind yet. We keep getting rejected by this 50-day moving average and that 100-day moving average. So I would say, and in the short term, the last week and a half or two, we've just been getting rejected by the EMA, not even those moving averages. And so we are overbought, or we are oversold. However, we have been selling off. So we will continue to be oversold every time we're selling off. So that's not telling us too much, but the support level is telling us, it's telling us that we do have that potential stop right there. Also, just looking at the volume profile level, I don't see us dropping anywhere lower below that $42 mark. So I would say, stay patient with this. We do have dividends coming out on the 9th. If it does drop to that 42 level, that would probably be the most ideal place to scoop a little bit up, in my opinion. However, nobody knows, and it could potentially reverse to the upside. So for that, I would say watch the EMA, right? The exponential moving average, right? When we break above this blue line, that would be your entry point to potentially start riding it out. the first level I'd be expecting to get rejected at is this purple line, which is your 50-day moving average. After that, the 100-day moving average. And then if we don't get rejected at those levels, I would say start paying attention to the 180-day and 200-day moving averages. The one thing I would say is consider this resistance level right up here. If we do push up, this would line up well with the 100 and the 50-day moving averages and this resistance level. So that would potentially be a resistance that we would get, rejected at. So that's what I'm saying with this one. Obviously the potential for profit, we're looking about 60%, and the risk, if we drop below that support level, we're looking about 10%. The closer we get to the support level, the smaller that risk gets. Obviously, you can manage your risk tighter. However, once again, like I said, wait for this to break above this EMA before even taking any action. Until then, it's just a falling knife, something to watch, but not touch. So that's what's going on with big. The next one is DRNA. DRNA. This one's a little bit on the riskier side. Very similar setup to what happened with all the ones that saw that huge drop that we've talked about after earnings. Once again, had earnings, huge drop, and now it looks like we've flattened out a little bit. However, we are sitting below where we were even in January. So this is a little bit more on the riskier side. This is a pharmaceutical company. Pharmaceutical companies tend to be a lot more risky. However, the opportunity is substantial, right? So if we do return to pre-earnings levels, we're looking about 45%. I would say managing your risk at approximately, let's go ahead and zoom in and set up our support level. I'd be saying managing your risk at about 1975 would probably be the place to do it. If we do measure this out, it could take a very long time for this to actually reverse. Maybe not a super long time, but I would say, expect a month or two, maybe. If it happens sooner, great, you'll exit once it does. But until then, this is something like Discovery, right? Where it dropped and it's kind of just been flatlining for a while. So the risk here, we're looking at about, I would say 7.8, fairly substantial, pretty big, a little bit big. Not 3%, but about 7-8%. But our reward is approximately 45%. So with this one, I would say, in my opinion, I would say really wait for this to either come back down to that 1948 level and hold, or, take that 8% risk and, and just take a draw on it, right? 8% is not that substantial if you're obviously going to be making 45. But the only issue that I'm having with this one is the fact that, it might take some time for this to pan out. So this is not something for 1 week. It's not a 1 week play. It's not a short-term play. This would probably be a longer-term play. And it really, really, really depends on a lot of the fundamentals that are happening with that company. So make sure to keep up with those fundamentals if you do choose to take any part in DRNA. However, I do think that, we have stabilized. We ended up breaking above this 50-day moving average. So it looks like we're starting to potentially push to the upside. We have been pushing up to the upside ever since we hit that 1948 level. The volume is much more, much greater than it was before earnings, right? So we're seeing a lot more volume in this particular stock. So it could very well snap to the upside in no time. So definitely one to pay attention to, just one to keep on your radar. And if you see value in it, great. If you don't, something to leave out and not touch. The next one is Carvana, CVNA. This one, Carvana has been doing very, very well. We have been trading horizontally for some time. Ever since January, we've been trading within this horizontal channel, the resistance right here, support right here. Dropped down a little bit below it, but ever since then we came back up. And then we ended up making all-time highs, and now it looks like we pushed back down. We are sitting here at this simple moving average, the 180-day and the 200-day. We hit oversold levels here on our side when we came down to this level, and then we started reversing here on the MACD. RSI, once again, we have plenty of room to run before we hit those overbought levels. So I do expect this, or I could expect this to return to at least, I wouldn't even say 375. Let's say 363, right? And that's 10% right there. Manage your risk at about 3-4%. And that would be the move with this one. Obviously, we could come down to the support level, but I am using the 180-day and the 200-day as a support level for this particular play. you know, obviously we're holding above the EMA here. So as long as we hold above that, you know, that's going to be the play with CVNA. The next one that we're going to be taking a look at is Fiverr. This one is one that we've talked about with the team for a very long time, ever since earnings and ever since we saw that drop, came back down to the support that we had at 150 right here. We came back down to that support and we have been recovering ever since then. I do expect this to continue to recover at least to pre-earnings levels. So that's another 26.86%. This is a bit of a gem here at the end. So if you stuck around, this is definitely one to consider. I'm a part of this one as well. And this is one that, you know, I see a lot of value in. Fiverr isn't going to go anywhere, and this company has been doing great. We broke above the 50-day moving average. We broke above the 100-day moving average, and it looks like we're just steadily pushing up, steadily recovering. So for everybody on the team that has taken advantage of this, when we did talk about this after it dropped, congratulations. And I would just say stay patient with this one. This will recover. It might take a little bit of time, but it will recover, and it will continue to recover over the next few weeks. The last two that I want to talk about is VLRS. So this one here, consistent uptrend pattern. And we ended up seeing a huge pullback here down to a little bit below the simple moving averages, even though we've used those, or we use the 180-day and 200 as a fairly consistent support level. And it looks like we just broke right above it again, broke above the 50, 180-day, 200-day, and it looks like we're just about to break the 100-day. So I expect this to potentially return to that 23.58 level, about about an 11% potential for profit here. It would put us at overbought levels, which would be where we might get rejected. So that also wouldn't be surprised. Plenty of room still to go here on the MACD. It looks like we are still continuing to push up. RSI also got room to run. So this is what I'm looking here at VLRS. And the next one is going to be MPAA. This one, again, one of those horizontal plays, not as easy to read as those consistent uptrend plays. However, this one is a horizontal play, and we did break right below the support level that has been a support level for some time now. I would say, you know, obviously look back at, you know, a daily chart for this one. Just to see where we could potentially go. I don't expect this to drop anywhere lower. We are at this, you know, we are at this critical volume profile level where, you know, we're starting to drop off here at the end. So I would say this is a fairly significant place to consider a potential support for this particular stock. It would line up with something with our November support level that we formed in November. And we do have a little bit of a tad bit of a gap here in November. So we might drop down to potentially, I would say 1796, but the potential for recovery is substantial, if you ask me. If we're looking from current price points to that resistance level right up here, we're looking about 34%. MPAA, Motorcar Parts of America. This company is also not going to go anywhere, in my opinion. So this recovery is, in my opinion, I would say inevitable unless we see something substantial happen in a negative way with the overall market. But as of right now, I would say this would probably be one to consider for that huge recovery swing play that you can hold for a few weeks and have this recovery. Once again, you know, falling knife as of right now, don't touch this until we do see a break above this EMA line. Once it does break above it, which would, as of right now, it would put us at this resistance level. If we do break above it, that's when you want to consider it. So even from this level to those all-time highs, we're looking about 30%. So that's all I got for this week, guys. If you guys enjoyed this video, if you found any value, make sure to like this video, share this video with a friend. If you're not subscribed, make sure to subscribe. A lot of you guys that watch these videos are not subscribed, so make sure to subscribe, and I'll see you guys on next week's Stock Talk video.